What up everybody, welcome back. It's RoyalBluFX here. In today's video we're going to go over some of the trades that we've taken. Today we made 37.7% on scalping trades that we've taken. So without any further ado, here we go. Alright, so the first market that we're looking at was the US 30. We saw this trade here on the 5-minute, I believe. We were using the 5-minute as our higher time frame, so you could clearly see here that the order flow was up, right? The trend is up. What I did initially here was I marked our last high before the drop below, right? And then you can see market just reversed, pushing bullish, like extremely bullish. So my indication here was obviously we're looking for buys, although I wasn't looking to stay in the market long term. All right, so once I highlighted this area of demand, you can obviously see where we've taken the trade here, right? But we've noticed that price came and rejected this big wick over here, right over here, right? And then all of a sudden price just pushed all the way up. So we knew we had some sort of indication that price should go up. It may not go all the way up, but we had some sort of indication that price should go bullish here. So what we did is we dropped down to the 1 minute, right? Just to kind of look at sort of the behavior of what is happening here, right? Where price tagged this demand zone, and we scaled all the way down to the 5-second. Let me just zoom out over here so I can show you. Once we scaled all the way down to the 5-second, we were able to see more of the detailed part of the market, right? And in order to trade correctly or with the market, you need to have a lot of more detail, more data essentially in the market to be able to take these trades correctly. So once we were down here, you can see how the demand area was tapped, right? We had one of two things. We thought, from what we speculated, what we saw here, we thought that, well, we knew that this was our major high here, right over here, okay, that was our major high at that point, right? And so what my speculation was is once price tapped our our demand area, what I was looking for here was buys. We're here, we waited for the chalk, and then we have a system where we are able to enter before the chalks happen, right? So you can see here there's the last up candle right there before this major move pushed all the way down and then just reversed right away like this. So this indicated to us that we were looking for buys here. You can see right here there's a flip, right, that just happened, and we took that buy and we targeted the first high, which is right here. Right over here, right? We targeted this high, and the only reason for that is because when you look to your left, we're essentially bearish, right? You can see that that the major structure has broken bearish right over here. Oops, excuse me, not right there. Right over here, you can see that the major structure was actually broken, bearish right there. Can't even draw a line today. Okay, right there. And then so that indicated to us that, okay, I know price isn't fully an uptrend at this point, so we're going to target some safer areas, safer supply zones where price will most likely go to, right? And one of those places, zones, was this high here. And the reason for that being is because we had liquidity sitting and resting right above here, right? You can also see right here there's an unmitigated order block that hasn't been mitigated yet. So there was a huge speculation that price will potentially reverse, and then we would we would need to get out of the market as soon as possible. The other speculation was really the low. There's that low and that high of these few candles here. This is our last up candle before the major move pushes down. So there was also another speculation that prices could actually target this high, right, and just target the wick, just kind of wick this high here, right, and then push prices down. So we had a first TP and a second TP right over here just for potential zones that prices could go, right. And the reason why I had this first TP, well, actually it was this was the first TP. But the reason why we had a first TP or a second TP or a third TP potentially is only because when we are looking to target these highs, we're essentially telling ourselves, okay, we're good. Since the market is, a lot of people don't know, where the market's going to go and where the market's going to potentially mitigate, because the market does whatever it wants to do, right? We can only just speculate and understand where the markets do potentially go and reverse, right? There's many areas that prices could potentially hit and reverse. So we had this high here as our main, one of the first main, obviously, areas to look to take out our capital, right? So when prices are going up, right, we just took partials. All we did was took partials and we let the rest run, just potentially to see if we can hit the first TP, right? Essentially, this is actually our second TP. This would be our third TP, excuse me. So what happened was price gave out, right, and we took our partials and we let the rest run. Obviously, you can see that price went against us, and we closed here at about 5%, I think. So it was, let me see, there's 8.3%. So we closed at a 5%, which is right there. You can see that 5 right there, right? So we closed right around that area at this point right there. So when price was starting to reverse, you can see it was dipping right below. There were no strong candles pushing above. It was just a bunch of little candles floating on the high here, and so we just got out quickly. But essentially, the reason why you need these first, second, or third TPs is so that you can give the market a chance to go and hit those TPs essentially only if the market does intend to go in those directions, right? So what I would always suggest, traders, is to always pay yourself along the way. As soon as you enter, pay yourself at the first 3 or 5%. So that way, eventually, if the market goes against you, you'd already have some money, obviously, and then you wouldn't have to regret being in that trade if it ever went against you or what have you. So this was that. So that was that first trade that we've taken. So that was done beautifully. And obviously, if you zoom out, prices did tap our correct demand area down here, and prices started to go off a little bullish here. If we go up here, yeah, right over here, right? So we could have looked for buys here to go up here. But at this point in time, I was looking at another pair, which is GBPUSD, right over here. And so this was actually kind of fun because we were trading the London session, and therefore we thought, okay, well, if we're trading the London session, typically GBP would move rather quick, right? US 30 wasn't so quick at this point, but the way we saw this market here, we were again on the 5-minute, and then essentially, I'm sorry, we were all the way on the 1 hour, right over here. We're on the 1 hour. We're looking to see what's happening here. We marked our highs and lows. You can see these highs and lows happening here, right? And then you could see that we marked our supply zone that hasn't been mitigated yet. You can see that there's liquidity running right above there. There's that little inducement right there, right? And so what we were speculating was, okay, well, we're looking to still buy because prices are still bullish. You can see that we're making higher highs and higher lows here. So my anticipation here was to just look for buys nonetheless. But the funny thing is, this is the funny part when I show you guys here. You can see that the supply area was tapped and rejected and pushed down, right? You can see this is the last impulsive area. This is the last demand area. So my anticipation here wasn't to look to buy long-term again or to hit our extreme high here. My anticipation was really just to scalp again and just to be in and out of the markets. I saw this area here on the 5-minute. I saw that we're pushing bearish, but yet we're touching the demand. So there's still some sort of weight that is holding here, although it's not going to be a long-term like I mentioned, but it's going to hold just for a little bit, right? And then until prices drop like this and then take off going downwards, right, on a downtrend. So what I did was I looked at the 5-minute, saw that everything was bearish here, touched our demand, and I kept scaling down to the lower time frames. Now this is where everything gets a lot of fun because I'm taking advantage of this last demand area, even though I know it's a sell. On hindsight, I know it's a sell, right, and that we're selling, but we have our major demand zone here holding. So I dropped all the way down to the 5 seconds. Let me go zoom all the way out here. All right, right here, right there. Okay, so once we tapped this major area of demand, I actually scaled even lower to the 5 seconds, not the 15 seconds. So here we go. Here we go. Okay. So we were here, tapped the major demand area. What told me this was a buy already was that once we had this chalk right here, you can see that it's a chalk, right? You can see that this low broke first, the high broke in second. You can see that this there is a candle that's that's right above this high here, this previous high here. So I knew that this is my order block right over here, and what I did was I used my 50% equilibrium tool, which is essentially your Fibonacci tool, right? And I marked this 50%. You can see how I took 0.5% risk here, not one whole entire percent, right? I didn't really want to be exposed too much in the risk zone here, since this is a huge candle. So I always split my risk into 50-50 when there's a huge candle like this. Okay, and once that happened, once price came in here and touched our area of demand, I immediately took a buy, because I knew that prices should continue higher, because we were at a point in time touching an area of demand. Once we bought this, we literally have to hold this, and we were holding it all the way here to this, neither near to this high here or to this area of supply. And the reason for that is because you can see that there's a low and there's a high here. So I essentially marked this whole supply zone like this. I didn't have my zone there yet, but I marked this out, and I already knew how the price needed to come here and mitigate, right, to close this last order. And so this was my first target. I didn't have any other targets other than this, and then I targeted, hit it, and we made 5.3% on there, and I was out before you know it. Now you might be asking, well, why didn't you take the sell in? Didn't you know there was a sell coming in? I told myself, yes, I know there was a sell coming in, but I didn't, when you're scalping, you don't want to just be in trades willy-nilly fast, right? I mean, being that this is the 5 seconds, this is really fast, guys. And so what you want to obviously do is just, take a breath and step back a few steps back, just to sort of get more of the feel in the scope of things. You don't want to just be in and out, right? From trades buying here then selling there all of a sudden, right? Only because this is personally the way I like to do things when I trade. So once price came down, right, it hit this low again. I was just watching this, right? All I'm doing is watching. I marked out my supply area, and of course I could have looked for sells, but once price did this here, it wicked this low. You can see how it wicked it with a wick, essentially, right? What was going through my head was I was looking at how the behavior was going on here. This is one of the ways where that I essentially trade. It's in our entry model in our course. Obviously, if you want our course, you can go here at RoyalBluFX.com and you can go ahead and purchase the course. But before the chalk even happened here, you can see how there's a low broken here, right, and there's a high right there. You can see that we took the buy an immediate buy here, right? We could have waited for a chalk, obviously, to wait for that high to be broken, but we didn't do that because this model here is one of our criteria, our entry criteria. So once we were waiting patiently. Once market did come over there like this, we immediately entered the market. Now we had a rejection. This is a rejection and rejecting the low. You can see that this wick here, this huge push to the downside, had no sort of impact to this low. So therefore, my only anticipation was the price needed to go up. And since that we had a confluence already with the demand area, this major demand zone here, I was already telling myself, okay, well, prices are still bullish, so therefore we're still looking for buys. We shouldn't be looking for sells at this point, right? And the lower you get closer to your to your demand zone like this, the more riskier these trades are. Essentially, these highs, right? They're less probable to work out for you, only because you're so close at an area of demand, and the trade may not play out the way we're looking forward to. It won't play out by selling. It'll just break above our supply. It'll break above our supply zone like this, and then we would have lost the trade, right? So the closer you get to these supply and demand zones, the less probable that trade is going to happen if you're trading against that supply or against that demand. So our whole anticipation here was we're just looking for buys because we're still on the demand zone. So why not look for buys, right? So the confluence with the demand zone and this wick here rejecting this whole entire low right here, already gave us the confidence that this the price should go up, and being that price broke so bearish like this, give us the more confluence and more confidence that price should go bullish here, and this area needed to be mitigated, right? So what do? We just entered the trade, right, and we stayed in it, and believed in our process, and there we go. We just hit that TP, and I believe this was a 10.3% right there. So we just closed out of there, right? So again, you might be asking, well, couldn't you just take a sell right now again? Well, technically no. I mean, I could, but I don't want to, being that the zone is so huge. Of course, I could have split my entire zone like this, like that, right? And then just kind of risk 0.5% here, half a percentage, right? And then take a sell. But then again, I'm not just looking to take trades willy-nilly. I do need more confirmation. Knowing that this low wasn't entirely broken, this is not a sell for me. So it wouldn't meet my criteria, my rules, right? So we played it on here. We were just scoping things out. We were seeing what was happening. We could see that there's a low here, that there's a high. This low wasn't broken yet, so we were just waiting to see what the market would do. Would the market break above this high here, right above this high, right? And if it did, what are we looking for? What's our next move? Well, our next move would be a potential buy like this, because now we're going to be following order flow. There's a break of structure there, another break of structure here, so this makes it very easy for us to look for buys, knowing that we're putting the demand in confluence with our higher time frame structure, and it would only make sense to look for buys here, right? That's only if prices actually broke above this supply area here, right? So we're just waiting patiently to see what's happening, right? Notice a lot of the times when you're trading, you just need to be patient, sitting on your hands and watching. That's probably about 90% of your job as a trader, right? All right, so now you can see here how we have a break of structure here. We've broken this low here. We have a supply respected, and therefore we had this high here breaking this low. So this already gave us some confidence that prices should go bearish. They may not break right through this demand, but we were paying attention to target this low here. Only this, right? Because we're in and out. This is just a scalping trade. So what happened here is price broke, right? We can see the flip zone right over here. All right, the flip is essentially just the last up candle before the down move, right? Prices come to an area of demand like this, right there, and you can see that there's buyers that try to buy here that were not able to break above this high. Therefore, it flipped right below here, and then it just went south from here. So we were looking for another entry. Okay, this meets our criteria. Seeing that how price went so bearish here and it's tapping this low, I was playing with a lot of risk here, to be honest. Only because we were on a demand zone, but we're also selling off, and there was an area where price respected the supply zone. So this gave us two confluences here, where it's respecting this supply zone, but it also broke structure. This is the first structure. Now we're working with the second structure now. So this gave us some confluence that prices are probably not going to go entirely down against this demand area, but it's just going to come probably meet here and then about this way, or maybe it might stop even about half of the way here and get out of there, right? It might start reversing going over. So what we did here was, you can see we took a snipe entry here. We had a whole 1% risking here, and still trying to believe in our process that prices should come somewhere right down here, and then we would get out. We're staying in this, obviously. Then you can see what happened here. Look at that. Prices would have taken us out, although I was like, okay, well, it's either going to take us out right now, and we're out and we lost, right? Which is part of trading, or just stay in the trade and see what will happen entirely, right? Luckily for us, prices still went bearish here, and then we get out. You can see how it just tapped that line here, and we just got out immediately, and then of course everything just went the other way from here on out, like this, right? So from this point in time, I think let me see. I think I was, yeah. Okay, there we took another trade here. So what happened here was we can see that this demand is still holding. It's still strong. You can see that we're only breaking by wicks, nothing more, right? This demand is still holding. Obviously, I analyzed the higher time frame to see what's happening. We could see that we had a lot of liquidity here. You can see there's liquidity, the high right here, right? These two highs. And then this is an unmitigated order block still. Yes, we did tap the very low of this range right here, but the way I see how prices mitigate is when they mitigate at least half or 50% of the order block. And the only reason for that is because there's a lot of buyers and sellers that buy and sell or trade off the 50% equilibrium line. So essentially, when you're looking at, this is the way I look at it, like this. Okay, so if you see that blue area right there, that's the area where prices have to come in close and or you know, where people will actually buy or sell from. You can also see that we have a blank imbalance here right there, which I actually did not see, which also adds to our confluence that prices should come back up there. I marked that like that, right? There's our imbalance, and so therefore we knew that prices should somewhat come up there, right? But am I fully buying right here? Not necessarily. What I'm also looking at here is price broke this low. You can see price broke this high. Price mitigated, right? So we know we're an uptrend, or we're buying. We're going to be looking for buys, but not for a long term either. Only because the long term has to break this high here. If it breaks that high, then we can look for a potential long term buy like this. A longer term meaning, you know, for a good 2 to 5 to 10 minutes maybe to hit another high all the way up there, the highest of the highs, right? So what we're doing here is we're scoping the market. We're waiting for some more confluence and more confirmation. I was just looking at this, wasn't really trying to react or act so fast off of this market. Right now you can see here, look what happened here. Prices just came here and went right through this area of imbalance. It came and created equal highs, which is, we all know what equal highs are. They're obviously liquidity in the markets. You can also see here that this internal liquidity was taken. So we weren't like, okay, let's just sell it anyway, because we're still against a demand area. We can see that prices haven't really broken the low yet, so it didn't really give us anything, any confirmation. So I'm still on the lookout here, still scoping to see what's going to happen. Prices were going bearish here. I can see a lot of liquidity at the lows here. I was waiting for prices to react here, of course, and if prices reacting went bullish like this, I would look to take a buy here and take out all this liquidity from the highs. So as you can see, prices are going low, right? You can see that we also are bullish. Because why? Because we have structure broken at the low and the high here. So we have the chalk formation, right? You can see this area here mitigated this flip right here. So prices just went up, obviously, hit this high. So yeah, what I'm doing here is just waiting and seeing what's happening. I'm like, okay, well, it tapped a low. Okay, what's happening now? If this low is broken, then I know I'm going to be looking for sells. Essentially waiting for this huge demand zone to be broken. Otherwise, I wouldn't play around with it, play around with any of these trades, okay? But this is what happened. Prices respected this low, so we know we're making a low and a high, a low, and now the next high, right? So here we could see that there's a flip happening here. Okay, I didn't take a buy just yet. I was waiting for price to break above, like so. Look at that. I marked it out like this. Okay. Not just yet, not yet. We were waiting for price to come back. We're monitoring this high here. We're waiting for this high to reject, to come back down, and for me to take a buy here. Okay, so we're waiting for it, and once price came in, I bought immediately. The reason why I bought at the lows is because I thought to myself, okay, well, you know, prices when prices retrace fully from a major high, that there's a huge impact when prices retrace fast coming down. They'll normally go right through that 50% and or linger around somewhere in between, between this 50% and the premium area. But sure enough, price impaled and went right through our discounted area. So therefore, we took the buy because we knew this is a buying area. We can see that there's a clean flip happening here. So we bought this without any pretty much any anticipation. we were anticipating that the trade should go up, so that's what happened, right? So we were looking to buy here, and once we bought, we were holding the price here. Now, as I zoom out here, you'll see what's happening here. we have that equal high here. We knew that this the price is going to push bullish here to take this equal high, right? This is where the money is. So we know banks are going after that based off of this order flow here. So my first goal was to really just take out the highs here and just either tap this high here, this high here, or this area, the highest of the highs, the extreme high, right? We stayed in here believing that the price should go through. We had a target hit there, and then I thought to myself, okay, well, what are the chances of prices actually breaking above, right? Let me just put myself over here. Okay, watch this. So what are the chances of prices actually breaking above? Well, we knew that prices could potentially break above based off of how we're on a demand level, on a huge demand zone level, right? And then I was looking to target something higher. There we go. There's my second TP right there. So I was looking to target this too, right here. And the only reason why I was looking to target that area is because I was thinking, okay, well, we have a high, extreme high, and extreme low, and this is just the all liquidity creating for this move to come and take out all this liquidity here, right? All this right here. Okay, to come and take out this liquidity and push bullish like this, tap this beginning part of the zone area, beginning part of the supply, and then continue bearish like this, right? So fortunately for us, prices did this, and we got out. We took our partials here, right? And we just let the rest run, and then once we were letting the rest run, of course, everything just kind of pushed south like this, and we were like, okay, we're done, we're out. So we broke even on the last partials, right? We closed the trade before it took us out negative. Okay, so that was that. So in the meantime, I took a break. I went out for lunch, and then I came back, and I was like, all right, let me just take another whack at GU today before I end. I could have ended all my sessions there, obviously. Sorry, all my trades. But thought, okay, I'm too good for this. Why don't I go for it again and just, take another whack at it, right? So the market was here at this point in time. We were looking at the 1 minute. We could see that price rejected this area of demand, and prices started going bearish. Again, we're not looking for anything long term. We're just looking for any things that are short term, right? Scalping. That's the whole point of trading. Is if you're looking for short term trades, just looking to scalp. Let's go zoom into here. Excuse me for my charts being so slow, and I don't know what it is, to be honest. Okay, here we go. Let me move myself over here. All right, so we could see prices pushing up. We weren't basing this. We weren't looking in any areas of demand here. We were just waiting to see if price could actually push up. We were here at this point in time. I actually made this liquidity line right here, knowing that that's my liquidity, just waiting for liquidity to be taken out because I know this is the extreme high, and then I'm looking for the sell as soon as price gets up there, right? So once price it didn't get up there to the extreme high, I don't think. Yeah, price rejected these highs here, these internal highs. It came down, so I was like, okay, well that's my cue. So I'm going to drop down to my 5 seconds here. Okay, let me just play this a little quick. Price touched the area of demand. Okay, I wasn't buying. I was looking for clear sells here, obviously. Price created more liquidity here. You can see the liquidity was taken out. All right, and then we were just in it still. We were still saying to ourselves, okay, we're looking for sells here. What I'm looking for here precisely is a chalk. Okay, even though our extreme high wasn't essentially tapped, there is this internal high here that we see. Excuse me, it's this area actually right here. This is our last point of supply. This is the other area right there. I'm going to show you guys right there. Okay, you can see that the supply zone was actually tapped. So my anticipation wasn't to take a sell quickly right here. I was looking to be patient, obviously. I was waiting for that chalk. The chalk happened here. Oops, excuse me, let me just play this quickly. Okay, I can see there's liquidity building above. So I wasn't taking any quick shots at this yet. We can see that the chalk happened here, right? There's the first, there's the high, and there's the low. Right there. This could go a little faster. There we go. Here we go. Like that. All right. Oops. Like that. Once that happened, again, we were in the clear of actually taking a sell, only because we saw our 5 minute to the 1 minute time frame, and we realized that we had a lot of liquidity resting here. Liquidity was taken out, more liquidity was taken out. We mitigated in extreme, or at least the internal high here, right, that order block, and then we had this chalk formation. So everything met our rules. We're just waiting for price to just retrace back up now for the finish, and as you guys know, once price tapped, we were just in it to win it. There was our 1% risk. Now from this point, you can see we just need to hold the trade to the slow. And you're probably asking me, well, why are you holding it to the slow? Well, I'll tell you in a second. There's internal liquidity there. You can't really see it, but that's liquidity. It's also inducement in the market, so that also gave us an extra confluence that prices should continue to the downside. We just trusted the whole process. The reason why we're targeting this low down here is only because this is still an area. Actually, did I mark this right? You can see this last candle down here. This is still an unmitigated order block here. This is inducement here. So that's why I targeted this low and I got out as soon as this order block was actually touched. So we didn't actually take this. We targeted this low right there. And that's where we got out. And we got, what, 5.6% on that trade, and we literally got out. Again, I don't hold these trades for too long because, you know, in scalping, anything is possible, right? The market could get so fast that, you know, once it takes you out, I mean, once you're in the trade, the market just moves so fast, so you got to get in and out, in and out. I'm not looking to stay in forever. I'm not greedy in the market. I got what I needed. I'm done, right? And so there you go, guys. That's how I was able to make 37.7% in the market. If you guys have any questions and concerns and or comments, obviously please leave them down on the comment section below. If you like this video, please throw a huge thumbs up. And as always, guys, I'm going to see you guys in the next video.